Welcome back. 12th April 2026, first session, part number 3. So we are continuing the topic, but now our topic is the exempt income. So what are the exempt income? Uh, will be deductible from the taxable income. So before diving into that, let's understand in terms of when we talk about the deductible and the exempt income. So what we do in that. So this is the another part. So then we will come on the detailed part of the exempt income. So from where the exempt income is coming, so under the income part. Since morning we are discussing these 3 points. We are trying to understand these 3 points. What is tax? Means the income. So now we discussing the exempt income. So exempt income. Okay, let's go to the slide and understand. Then we'll take the concept of the exempt income. How will because the calculation part will be coming soon. Okay. Part number 3, exempt income, we're gonna discuss. So see here, the exempt income as per Article 20 of the city law, there is the 8 adjustment in the accounting profit. Actually, this screen is hiding some text. So it's okay. The taxable income, actually, this is the accounting profit. What is the accounting profit? Let's take the quick accounting profit. Normally, when we prepare the financial statement in or record the transaction in our accounting system, let's accounting profit, from where it will come. I'll use the word accounting system, any accounting system like the Odoo, like this Zoho, like SAP, or any other. So let's see, like Tally. So we are recording the transaction over here, like the income and the expenses. So at the end, we will have the profit or losses. This is the first the transaction level we are recording. So this is called the accounting profit. In the other way, we might also say the financial statement. Financial statement mean the audited financial statement, the word mostly we are familiar. Actually, this is the same data from accounting system we audited. So normally, this is called the accounting profit started from, in which we give the profit before tax. Then we will say the less or minus is the tax. Okay, these are the provision. Even in audited financial statement, the tax is calculated. This is on the provision basis. Actual may differ. Okay, why? Because after we have the audited accounting data, we start working on that. Mostly before that, we consultant is trying to ensure it will be matched, but in certain cases may differ also. May differ also. This is the just point to highlight. But of course, now people are familiar. They try to do all the adjustment before the audit issued. Even the auditor is insisting uh, to give us the calculation of the tax computation. And Big Four are the other top 10. They are requiring get the tax consulted computation. Okay, for the city payable. So anyhow, these are the accounting figures that we are getting from this. So whatever the adjustment or what are the deductibles, because in accounting, whatever the income is coming, we keep recording here, right? We are keep recording as per the, because so let's say our income is the 1 million, in which we recorded all type of income, but there are certain income are exempt. Okay, certain income are exempt. So which means currently our the net profit is higher side. Why? All income is are exempted. The income are added. Even this profit before tax, this is what we call the accounting profit. Let's say I give the example the 500, in which all the income are added. But tax is saying there is certain income is deductible. Okay, deductible exempt income. So maybe we have 200. So we will minus from here. So now our net taxable income is 300. So now the concept of deductible, I believe mostly familiar previous already, but again, I'm just highlighting. This is the concept of deductible. And accounting, we add it, but tax is saying is exempt. So we minus from here. Why we minus? To compute taxable income. There is a difference between the accounting income. So here the important point of our learning, there is a difference in the taxable income and the accounting income. So we start tax calculation from accounting income towards taxable income while doing the plus minus adjustment that's called the deductible and non-deductible. Hope this concept is clear. We are on the same page. Okay, so let's see what are the exempt income. Here we are saying the four as per Article 22 of the city law. So now moving forward, all the reference of the relevant article we already written along with the each point. And whatever the in certain point we try to add the link also. We'll keep sharing the link also in the group for that relevant applicable ministerial decision, cabinet decision. But the article of the city law, you can download the city law, but download latest one from the FTA because maybe some changes are happen. So in which you can download city law and go to the article 22. This is what we learning today. Here the put the minus because this in detail we will learn when we come to the exempt income. But today our main agenda to understand the key areas, key principle of the taxation. Okay, so now let's see the exempt income. The first point, the local dividend. Under exempt income, what are the points are coming? Local dividend. Though local dividend income came from UE company. See here when we are mentioning 1 by 4 because total is a 4. So this is the first point we are discussing. Article 23 of the city law is covering on that. You can quickly, if you are already in the city law, just see the article 22 of the city law. So now, because this article have the other terms and condition, if you see here, less than or less than or more than 5% does not matter. Anybody would like to give the comment on what does mean? Local dividend exempt, less than or more than 5% does not matter. What is this regulation? What is your thought is coming? Even right and wrong doesn't matter. Just your thought or first point of understanding.
Sir, as it is already taxed because if it's coming from the local company, so it is already that this company already paid the tax, the corporate tax. So the dividend is paid after the like
Okay.
after the tax is paid. So that's
Okay.
why it is exempted from the further corporate tax.
Okay. Anybody else also want to?
5% means it should not be more than. It doesn't matter if it is total dividend income is 5% of total income or less than 5% of the total income. Doesn't matter.
Okay. Anybody else?
And sir, there is a one there is a one point like if we have purchased the shares of international company and we are receiving the dividend. So if we have more than 5% shareholding, then it is allowed to have some exemption under some circumstances. But if we have less than 5% shareholding, then it is not allowed for this exemption.
Okay, thank you very much. Yes, both mentioned very precisely. Of course, the local dividend, the first point is mentioned. Why we are saying other terms and condition is not matter less than or four, then these are the terms and condition. Basically, we will see where that these terms are applied. But the one important point is mentioned, one of our participant, he said, because this amount is paid after the tax. Okay, the government already charged the tax. So you receive the dividend income after the tax, you will not gonna pay the double tax on that. Okay. So this is the local dividend from the UE company. The word is UE company because UE company is registered in the UE. That's why they paid. They paid the tax and then they distribute the dividend. But here you have to understand this definition. We have to see whether the dividend is paid after the tax or the before tax. This is another interesting point. All the companies in the UAE, in general principle, we will understand, okay, the dividend distribute after tax. But there are certain circumstances or area, maybe this dividend paid before tax. We were discussing the exempt person. I mentioned already the 10, but I said it is 12 now. Okay. Why is 12? So they added another area of they call the activity. They said the real estate trust. Okay. The real estate trust under that they think, okay, if there are certain circumstances, if the trust, if the 4% condition, okay, I'll not dive onto that. I will go later on. Here they will, this trust itself is a exempt. Okay, because we discussed the exempt. Okay, they said, okay, let's say QIF, but that is a different trust. I'm giving the example. One of the real estate trust, if they got the exemption, but in this trust, you invested as a juridical person. Again, the concept, is a juridical person. If you invested in this trust as a juridical person and he claimed as an exemption, which means the trust is not paying the corporate tax. But they said if the investment of that trust is more than 4% and the other condition is breach, then okay, trust will not pay the tax, but you will pay the tax on that income. I'm just highlighting there are certain scenarios. Maybe you have to see the company not paid the tax and they given you the dividend. So then you have to pay the tax on that income. This is the exception, what I'm saying. Under certain circumstances, under complex structure, such possibility is also there. This is the law, I think. Now, recently, I'm saying the exempt person, the definition of the exempt person and the investment, but here they said investment made by juridical person. But if the investment is made by natural person, then story is different. Then it will remain exempt. But this case is getting different if juridical person. Here the 220% criteria testing, but if we discuss that, that standalone is a different topic. But the important point I'm trying to highlight, always rule of thumb is not there in the law. We have to read the circumstances and see the applicable regulation. But the first point, the local dividend from UE company, the UE company is exempt, but one of the scenario I explained, we cannot say standalone. But if the real estate trust, real estate qualifying investment funds are certain scenario by juridical person, then we have to see the terms and condition as well. This is only one of the criteria. That's why we are saying is does not matter. So another is a participating interest. Participating interest, the point number 2, what is the participating interest? Anybody would like to mention? Earlier, one of the participant is highlighted, but I wish somebody else would like to explain. Okay. The participating interest, I'll give you the example. We are familiar with the Aramco. What is the Aramco? Aramco is one of the oil company, one of the leading oil and gas company who's distributing the oils. Okay, the Aramco shares can anybody can buy the 5% shares of that Aramco. Anybody can buy 5% shares of the Aramco. Here, the participating interest mean you invested in the another company. If you buying the shares in Aramco, this is called the PI. If that company shares go up and down, maybe due to current scenario, the shares of companies is going up and down, we are getting impacted. The person who invested in that company is impacted. By the way, in the UE real estate, if the Amar real estate, somebody trading in the shares are equities, so Amar real estate shares are 25 to 30% on lower side now due to current recent geopolitical situation. So the point I'm going to highlight okay, we as a professional, we are only focusing on the one source of income, that is employment. Apart from that, keep building your second source of income also. I'm not saying you invest in shares. I'm doing investment in shares, but I know how much I can bear the. So you guys also try to see second source of income as well. Okay. So it's not any rocket science, but do yourself, learn yourself. It's not just going and jumping into that. So anyhow, just take couple of equities. I'm doing any equities only, not any other kind of. So focus, take one or two equities. Keep monitoring on that 1 year, 6 month, 8 month. You will understand. Then gradually invest 1,000, 2,000, 3,000, depends upon the budget, but not blindly. Anyhow, the Aramco shares, anybody cannot buy the 5% because the share value is much higher. So they said, okay, if you buy the shares more than or greater than 5%, or you have 4 million AED, not USD, AED in shares of that company. If you invested in that company and these two criteria are met, either this, if not, then they think, okay, at least you did this much investment. Then your income, what will be the income? Dividend income. The first we are saying the dividend income will be exempt. This is called the PI, participating interest. Participating interest mean you did the investment partially because you cannot own the company 100%. So you did partial investment, and that investment, these are the basic points, the 5% and 4 million. There is another terms and condition, but so far we are just discussing the basic uh, terms and condition. Okay, the dividend or income you get from the Aramco shares, and the investment that you have more than 5 million, so is exempt. Either this or either this. Any point over here?
Sir,
Yes, please.
what is mean by applicable on 4 items?
We are discussing on one by one. It will come. So
Oh, okay,
because
sir, understand.
yeah, because here we mention we see 1 by 4. One is discussed. Second, two is discussed. Coming more also. Okay. We summarize from the this regulation to okay, what are the points is applicable. Now, what is the third point? What is the third point? Foreign permanent establishment exemption. Foreign permanent establishment exemption. This we understand earlier is a branch. We discussed as a branch. Just have understanding, although P definition is much comprehensive. So if you're getting the income from the PE and you opt for the exemption, if you elect, they call the election, then again it will be exempt, right? Then now the fourth point is coming. We will look into that election, how the election will be. And from the return, we will see this election also. But so far, we are saying if we have the branch and we are getting the income from the branch, and we said, okay, we don't want to include the foreign branch income into the UE income. If UE 100 million, and from the branch in the UK, you have the 20 million, you said, okay, I opt to exclude. It will remain taxable in the UK because UK is already paying 24% tax. We will understand what is the, when we have to include, when we have to exclude, what are the tax planning point of view. So this is the concept of the election. Now the fourth point, international transport by non-resident person. Here another concept, non-resident person. What does mean the international transport? First point,
air flights, etc.
yeah, like we can say the Emirates airline. Emirates airline is international transport. Like we can say the Air Arabia airline. We can say the Etihad. Any other example? Any other example, please? International transport. We might say the uh, any UK airline name, Royal something is UK airline. Let's like Turkish airline, like Air India. So now the concept is that the word is mentioned international transport. Okay, all these are the international transport or no? This is international or no? Yes,
Yes, yes, yeah, international.
international. This is also, this is also all international. But the second word is mentioned non-resident. Now the snow, they refined. They said non-resident. Okay, this is the UE. So all are UE transport companies, right? So how about this? All these are UE or non-UE? This is the UK, this is the Turkish, and this is the India. So this is non-UAE, non-resident, and this is the resident. Hope the concept of resident and non-resident is clear now. Okay, so now we understand the international transport, then we understand the resident and non-resident. Now the third point, reciprocity. Reciprocity principle applicable. What is the reciprocity principle? Anybody would like to participate and explain what is the reciprocity? Okay, I'll give you the example just from our routine life to understand. Reciprocity in routine life, in our domestic life, in our personal life, when we go someone home and we'll take some gift, right? Or we go somebody invitation for the kid birthday, we take some gift. Okay, let's take the here, Mr. A family, and here is the B family. They sent to them invitation for the kid birthday. So they joined that accepted the invitation, and they came up with the some like cake and plus gift. So who invited? A. If is A invited, so now let's say that now B invited for the kid birthday. if they invited, so now when they will go here, but they not took any cake plus gift. They said, okay, we'll go and have the fun with them and celebrate the birthday because they already have the cake and already everything is ready. We'll just join and have enjoyment at the gathering. So this family is their, what is their expectation? As a human nature and as a Asia culture, what is their expectation? Anybody would like to elaborate? No one?
They will expect a cake and gift back.
Yes. They are expecting the same gift that we given, doesn't mean the value, but they're expecting the gift. So if they not bring, so they will say, okay, next time we will not take any gift to them also. This is the common culture in the Asia, not only birthday, in the many events. So this expectation is there. So this is called the reciprocity principle. This is called the reciprocity principle. If you give, we will give. Now, take that same example, UAE and UK. So now instead of this gift, replace with tax. Earlier we were discussing the gift, now we are discussing the tax. They're saying, okay, if our airline operate here and you will not charge tax to our airline, so your airline is operating here, we will not charge tax. Do you understand? Guys, do you get this concept?
Yes, yes, we got that.
This concept, if these 3 or 4 points, if we catch that, this concept is fine. It's not easy to understand, then it's not easy to absorb, but I tried in the maximum way to highlight the difference with the example uh, throughout the session, and still maybe now many people are not understand this concept. First, the international, we learned that. Second is the resident, non-resident condition, we learned that. Third, we learned the reciprocity. And the reciprocity is the, maybe some people are familiar, but mostly is new terms to them. And how to apply, this is another concept. So I try to give the example from the domestic life where we understand the mean, the our domestic life in our family, in our associate nearby, we seen this culture, we heard about that. So now we correlate, okay, this is the reason. If they're not given to us, we will not give back to them. We'll keep operating, but on the commercial term, same to same. So this is the fourth exempt income. First we learn over here. Second we learn participating. Third we learn foreign permanent establishment. And fourth we learn international transportation. And this is only the one of the point. If you understand this, everything is good. If you not understand the whole concept, this exemption, you will not understand. Any point so far? Okay, now we are diving into detail for the participating interest Okay, what are the other income or what are the element included into that? The participating interest, local company dividend that we covered over here, but again, it's the same umbrella because the concept is a dividend. So earlier the concept, one of the participants saying, what is this? So let's understand that also. Okay, the dividend might be come from the local company and might be from foreign company. So this point we already covered over here is one of the exempt income. But as a participating interest, that investment did in UE company or the foreign company. So one of the point is the here. This point, the 4 point, your understanding will be coming up. Foreign dividend income. Company paid dividend to UE company. Okay, the foreign dividend. So one point is here. Then let's see, understand how this will cover up. Because from participating interest, we will receive the dividend. Okay. Then we will receive the capital gain on sale of shares. Again, the participating local or UE company share not applicable again is coming here, the point here. But as a concept, we are understanding capital gain might come on the sale of shares. So we are discussing here foreign capital. PI, investment in foreign capital gain of sale. If these conditions are met and we are getting the income from foreign capital gain or loss on the shares, one is here, count now. One, this is two. Third, foreign exchange gain loss on the investment. Exchange gain loss. Exchange, Forex, we do understand that at the year end, all the balances we are, if the multi-currency is there, we are retranslating at the reporting date, right? So here is saying the foreign exchange gain on investment. The PI, if the PI investment is done and the criteria is meeting and the gain loss is stating, so we have to consider under the same principle and it will be exempt. Fourth, impairment gain or loss on investment amount. Oh, now this IFRS concept is there. So how will be impairment gain and loss on investment? Because investment subject to foreign exchange rate also at the each year end, plus the impairment also. Impairment testing also will be there. So this is the IFRS part. So anybody want to highlight which IFRS dealing with the impairment on the investment? Anyhow, I will not dive in towards IFRS because as a tax accountant, if you have the knowledge of the IFRS is good. If you do not have, but still you continue as a tax professional as well. You're still continuing. Why? Because your working start after audited FS. Tax accountant working starting after IFRS. This is the IFRS team headache. Let them handle. Why we have to complicate our life to dive in the IFRS also. As a tax, even we do not familiar with the IFRS, still we good to go. Hope I'm clear. So another important part, we have to be understand and keep confidence. Okay, I'm the tax accountant. Financial accountant is may have different expertise. If I can be plus or can stand alone is good. Then IFRS expert or the professional, it's plus. So tax accountant have plus, 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 but standalone still is good to go. Standalone good to go. Okay. In practical life, all the same person is not doing all these tasks. Of course, in the industry, might be you are taking care of such scenario, but practically each role is a standalone career oriented. Each role is standalone career oriented. Hope the this because sometimes people say, okay, I don't know IFRS, so I cannot be tax accountant. Still is good to go. Okay, anyhow. So here the point is applicable in 4 items. Which item? One, foreign dividend. Second, foreign capital gain and losses. Third, forex exchange on investment. So now in financial statement, when the exchange gain losses are shown, it should not be one line item. It should be not one line item. It should be two line item. Even in your accounting system will be two line item. Because if coming from investment, you have to record separately, and if coming from the normal course of like the receivable and payable at the reporting date a different currency, so you have to keep separately. So this investment one, it will be exempt only. It will be exempt only if these conditions are met. If not, then it will be taxable. Guys, do you understand the point here I'm trying to highlight, or the concept I'm trying to highlight? I'm saying at the year end, you have Forex gain. $1 million. But it have the two figures. One is the from the investment, another 500 from the for the transaction, year-end retranslation of the balances. So this will be taxable. This will be taxable subject to the election. If we did the realization or non-realization basis, it will be subject to CT. But from the investment, this one will be treated as per this. If the condition is met, it's exempt. You have to minus from the taxable income. If condition not met, it will be taxable. It will remain as it is. I believe this concept is pretty much clear. If you want, I can give you the more example. Guys, any comment on this point? See, you learn such technical point even if you go to your tax manager, your tax consultant may be not familiar. The point is that you must share with them, okay, one of the scenario, like this scenario, take the example, make your own working and share with them, sir, this is the one of the learning I made. So this is impacting our financial. This is value addition in whatever role you are. So if you share with your management, your team, your circle, share this value addition. Maybe now you not understand. While sharing with them, while discussing with them, you will understand this concept. To discuss with them, share with them, not like that you know something. You must keep the intention. If you're sharing with them, discussing with them, you will get learn. Why? Because they will ask the cross question. Then your mind start working. Okay, how this happen? What will happen? So sharing the knowledge in the intent not to show the expertise or the superiority. To learning point of view, when you discuss with someone, he will ask the cross question. In this discussion, you will understand or you will realize, okay, I'm lacking on this point. Everything is clear, only this 10%. So you might read and this concept will be clear. This is the principle what I'm following. So I share the same principle. Everybody have own way of learning, but I believe keep sharing the knowledge will give us the more learning. So this is one of the very technical point, and most of the financial, the big organization, they have the investment, they have the multi-currency. So this difference is not there. And this difference is not highlighted to the auditor also, and he overlooked. And this difference is not highlighted to tax consultant, he's overlooked, and return is filed. If the return is filed and this income subject to the exemption and you not claimed, you paid the higher tax. You paid the higher tax, but on the same time, you are non-compliant. This is the subject to administrative penalties. You're paying the higher tax, but still subject to administrative penalties. Hope guys, this concept is understand. Any point, any question, I am welcome. I think the sending the messages. Okay. Let me. Okay. Let's say the company XYZ he made investment in UK company for the 1 million pound. Okay. Okay, so now on the other side, the same company, they have the suppliers and the buyers supply. This is the investment. And this is the transaction, normal course of transaction. We can say the AR, we can say the AP. Okay. So plus minus here we are standing for the, let's say 200K. Forex gain. How the Forex gain? Okay, I'll give you the example also. On AR, the outstanding balance due to retranslation, the AR is increased by 200K. Okay, and the AP is, I think, is opposite. Let me take. The balances of the year end at the year end December 31st, what are the existing balance if we applied the exchange rate? What is the exchange rate? UAE Central Bank. Because at reporting date, we have to translate into the local currency. So while translating, AR balance is increased by 700 and AP balance is increased by 200. So which means this is we have to pay more as compared to the previous, and here we have to receive more as compared to the previous. So what is the gain or loss? This is the net gain. This is the forex exchange gain at the year end. And versus the investment. Versus the investment. And here the investment you made the 1 million and the exchange rate was 4.5 when you made the investment, right? Now the exchange rate is 5.5. So the same 1 million, if we convert it here, is a 4.5 million AED, right? But at 31st December, when we are converting, this is 5.5 million AED. So now here the 1 million is gain. Understand the difference? 1 million is gain. So far, understand this point? So if this 1 million is gain from the investment, how it will be treated? How it will be treated as per this principle? If these terms are meeting, is exempt. If not met, it is subject to tax. So assuming that your investment is see here investment is already more than 4 million. So you met the condition, so you will not pay the tax over here. On this 1 million, multiply 9%, how much? 90,000 tax city not applicable. But if you're not familiar with this regulation, so as a result, you paid the extra 90,000 tax to FTA. Understand the difference? And this 500 will be treated as per your election, how you treated that election. FTA, sorry, election. What is election? Realized or unrealized? What we selected. If we selected this, it will be not taxable, but if you selected this, it will be taxable because unrealized. This is so far unrealized. This is not realized gain. So here you have to look over here. Okay, guys, hope this concept I tried my level best to explain. Okay, now let's understand the next part, the foreign exchange permanent establishment. What does mean? Foreign branch option election made. If election is made, so it will be, now we are seeing foreign branch election made, yes or no? If yes, do not include into foreign PE profit. This is the exempt. Let's say if a no, what does this mean? This is coming here. Election made or not made. If made is exempt. If not made is taxable. We have to add into profit calculation. Okay, another concept. just for understanding as a base preparation, foreign investment, what benefit to have the election? Foreign investment, what's benefit to have election? So as an investment, we have to see what are the options as a tax optimization we can get. What are the tax benefit we can get? So here, understand another part, subsidiary. Subsidiary mean another juridical person will not give you profit. Subsidiary, here the concept we're trying to explain, what is the concept of the branch versus juridical person that called the subsidiary. Okay. So branches giving the profit or loss. And here you're getting the subsidiary not giving the profit and loss. They're giving you dividend, rental income, interest income, royalty, management fee. So in terms of here, we are discussing the branches. If we not opt the election, the profit and loss will be added into UAE income. Okay, guys, I believe our time is over now. And any questions so far here? So let me know. Another note over here, natural person or UIP partner doing real estate activity without trade license through unincorporated partnership may not subject to corporate tax for personal investment. Here the mention without trade license, another point through trade license. Natural person or unincorporated partnership, unincorporated partnership we not discuss today, we'll cover in the next session. Partner doing real estate activity through trade license, even the sole establishment, are unincorporated partnerships subject to city for personal investment real estate for the city. For the personal investment real estate, not eligible for the real estate relief. What point is highlighting through trade license versus without trade license. Okay, guys, thank you very much. We are closing our today's session over here. If any question, any comment, so most welcome.
So with this recorded class will be shared in the group.
We have the YouTube channel. We are uploading over there. So all the recordings are available over there because that's everybody can quickly get over there.